I'll just raise my volume, and yeah, if you have any queries or if you need any information, you can just like write in your chat section, and I'll try to reply it at my best of knowledge. Okay, so I'll start with a brief introduction about beta quants, what we are doing at beta quants, what are the services that we offer here, and how you can benefit by being a part of beta quants as well as availing services from beta quants. Okay, so beta quant is a startup. We started in Jan 2022. Okay, and it has specifically two pillars actually. The first one is QuantLab. I'll open the site just for you to follow me. Okay, so this is what is beta quants. It's next gen learning platform and fintech solutions. Okay, we have QuantLab, we have SaaS for fintech, we have consultation services, and we have some resources. So what is QuantLab? QuantLab is specifically for people in the industry who want to make a career into fintech. Okay, by fintech specifically I mean managing money in short. Okay, so every firm, everything that deals with capital markets or any investment domains or any trading derivatives or any kind of like applications in finance, that comes under our domain. For people from different educational background, whether be it engineering, whether be it management, or whether be it commerce, or whether be it pure sciences, irrespective of their specific education background, they can make their career into finance. They can get into various financial domains. So when we hear the word finance, we have a very limited perceptions of what finance means. We think that some guy or some dude is trading on his terminal and that is finance. We think that someone is kind of like transacting with banking instruments and that is finance. We think that banks are transacting with RBI or macroeconomic policies are intertwined with our lives and that is finance. So the thing is that each and every of the answers is correct actually. Finance is a huge collection of every domain, and somehow or the other every person is linked to the domain or some part of domain of finance. He may not have the entire picture of the financial domains and he doesn't need to have. So that's what QuantLab comes here. QuantLab is specifically for people who want to make a career into finance, whether be it in financial industry or whether be it for his personal financial accounting. Okay, so in QuantLab we have a couple of courses here. We have Python for quantitative finance. This is a 3-part series actually. We have Excel for quantitative finance. Again, it's a 2-part series, and we have blockchain technology for like upcoming folks who want to make a career into blockchain and related systems. So why do we like have these services? What is the need of it? Getting into finance is not as easy as what finance seems. Okay, trading has a very limited, very low barrier, but excelling and like taking the trading as a business and having a serious kind of like a trading career or investing career or getting into finance or getting into domain where you are managing other people's money is kind of a serious profession, and being a master of this profession requires much more than what is being taught in schools and colleges. So if I talk about various streams of education, suppose a guy is from engineering, he may be having a good knowledge of mathematics, he may be having a good knowledge of programming, but he may be lacking some kind of like financial background. And for them, like the Python for quantitative finance is kind of a bridge from engineering to finance. there's a different domain altogether of finance that is coming into picture, and that is financial engineering. Now, what is financial engineering? Now, financial engineering comprises of statistics, mathematics, that is a part of mathematics, programming, and finance. And somewhere there are people who are willing to make a career into finance, and they are lacking this specific like culmination of the entire knowledge. So say someone is from commerce background, he had his like studies into commerce and he wants to make a career into finance. He can take our course and he can like patch up the areas where he feels weaker. He may be having a weaker hand in Python programming, or let's say like Excel. So we have the courses curated for his or her needs. So a lot of talk about our courses. We'll go to our separate domain, that is software as a service for fintech, or rather we call it SaaS for fintech. Now in past couple of years, we have seen a massive rise in the number of industries that have participated into finance, directly or indirectly. Directly, I mean they have tried to manage their own family fund. They have like collected money from people around them, their friends, their families, their like colleagues, and they have started it as a full-time business. So they have gathered a small amount of fund, and now they are like into managing money, managing investment, managing trades. For them, we have specific solutions and also customized solution. And the thing is that I'll explain you why do they need solutions. Now the thing is that when the trading capital is small, okay, there are many type of risk actually involved. There are many type of losses that are there. So that can be ignored by a small capital holder. So let's say I have 50,000 of capital. I'll only place a market order because that's the easiest way. But when the capital exceeds 50,000 crores, I cannot place a market order. It will literally move the market itself. Okay. So for them, like there is a need of specialized software that only places iceberg orders, that only places limit orders. Okay. And there is kind of a buy side ventures, there is kind of a sell side ventures that are specifically dealing with this kind of like orders. Okay, so for whom are we like creating these softwares? So when the firm is like very big, actually they have thousands of crores of asset under management. Okay, they can afford to create their own technical desk, own technical team, and whatever they need, they can like pull it out of them. They can create it and they can start using it. Okay, so if the AUM is crossing like 100,000 crores, like this is a normal for a mutual fund. Okay, so just 0.001% of their entire AUM is enough to kind of like generate enough to kind of stabilize the entire tech team. Okay, but when the capital size is on a lower end, let's say like you have collected some 5 CR or 10 CR of capital from your friends and family, and that is kind of your family fund, or even lesser than that, you are a retail trader and you have like after a couple of years of working in the industry, you have saved around like 10 to 50 lakhs of capital, and now you want to like invest for a better future. Well, that is why we invest, for a better future, right? Now in this scenario, you cannot afford an entire technical team working for you, right? The only choice that you have is kind of go for some manual kind of like trading systems, or some discretionary kind of like trading behavior that most of the retail investors or traders in India and across the globe approach actually. So we'll go to our webinar of life cycle of automated trading system. So this is the topic of today's webinar, and this is 0th webinar. So this is the first, actually this is the first one, but we start with 0, that's why it's webinar 0. Going forward, we'll be taking suggestions from people all across who are interested to get whatever the topic that they want to, and we'll prepare a content, and then we will be like having a webinar, we will be having a discussion. Going further, we'll also be calling notable guests who are kind of like pioneers in this fintech world, and we'll be having a discussion with them. So if you have not subscribed, you can subscribe us. If you have not filled our Google form, it's in the link and you can fill it out. And whatever your suggestion, we have a Telegram, we have a Discord. Wherever you want to connect us, you can connect us and give your suggestion, feedback, queries, questions, whatever. Okay, moving on to the life cycle of automated trading system. So what is an automated trading system? So actually this automated trading system is a culmination of two different and a very big and deep domains actually, and those two domains are execution and strategy. Okay, so when we talk about execution, so that is what is let's move it parallel with some manual trader who is sitting in front of screen, and in parallel with that one we have an entire system on the cloud that is trading automatically without any human intervention in the market. So suppose like you have a strategy, or I'll take my example, me Gaurav, as someone who is like sitting on the front of screen and like trading and placing some buy orders, sell orders, and collecting the profits or even accumulating the losses. Okay, suppose I have a strategy, and the strategy, following the strategy or following any kind of like discretionary behavior or following any kind of like tips or friends or some news, I have a buy. So before like going further, let me give you a word of disclaimer that this is completely an educational kind of like domain, and I'm not giving you any kind of like buy or sell investment advice here. Any kind of like losses that you accumulate by following my advice is kind of your own. I don't bear any kind of responsibility. Also contact your investment advisor before taking any kind of like buy or sell advice. Okay, so that's it. So moving further, if my strategy, or if I want to like have a buy, if I want to like have a signal of a buy from my strategy, I'll create my strategy in similar fashion. Okay, then I'll log into my trading terminal. I'll select the script, I'll select the quantity, I'll select the order type, and I'll fill in the details, whatever it is asked by my broker. Okay, and then I'll place the buy order. Okay. So the entire scenario, entire the steps that came after, that went into creation of the signal, as well as the steps that came after the generation of the signal, is entirely taken care by the execution application. So let's say the strategy generated a buy signal in Reliance. Okay, my execution app took those signals of buy and Reliance. It calculated the quantity, it calculated the price, it had its own kind of like order management system. It generated the order best suited for the strategy, and then it sent the order to the broker. Now this can be as complex as possible and as simple as possible as you want. Okay, so in a very simplistic way, it got the signal from the strategy and it placed the order. Making it more complex, it calculated the quantity, it calculated the stop loss price, it calculated the trailing stop, and it starts monitoring the order from the very beginning till the very end. Okay, suppose the direction of the trade moved in our favor, the execution app is responsible for like moving the trailing stop loss. Okay, so these are all the things of execution app. Coming to the strategy. Okay, so strategy, basically what we call in kind of like quantitative world, strategy is a model, a mathematical model. Any strategy that is kind of if you can say it's based on price action, if you can say it's based on technical indicators, if you can say it's based on news or some other sources, or even if it's like some copy trading application that is like copying the trades from some else's trades, that all comprises of strategy. Strategy is kind of like a system, a black box that generates buy and sell signals. Okay, and entire profits is derived from strategy. So what if we partition these two as very mutually exclusive? Okay, so suppose you have a strategy but you don't have execution application. So that is not a thing of worry, because just you have a money making strategy. That means like you can go to the terminal by yourself and do some manual trades and make a profit. Okay, given that your strategy is good enough to make a profit on a consistent basis. If you only have an execution application but you don't have a strategy, then you can do nothing. You are as good as nothing actually. Okay, because you don't have a strategy, you don't have a working strategy. Okay, so the thing is that why execution application is important despite having a strategy. Okay, so most of the traders, let's just take an example of a manual trader. So how does a manual trader fall? They may be having a good strategy, but the thing is that when it comes to the risk management part, when it comes to the psychological handling part, then they fail actually. And this is like true for any kind of like a beginner in the market. Okay, let's suppose like how does a trader fail? Okay, I'm giving a classic example of how most of the trading firms, and starting from like retail to all the way up to like billionaires, how do they fail? So the thing is that they may be having like a wonderful streak. So if for a beginner, like the streak may last up to like a month or so before going bust, or for a hedge fund or a big firm actually, the streak of the winning may last up to like 20 years or like several decades. And suddenly like they start getting greedy. Okay, so they start taking more and more risk, and once or like twice a month or twice a trade, what happens is that the trades go south. Okay, and in lack of a proper robust risk management system, they wipe out a good amount of capital, and they get into some kind of like revenge trading. So they trade and they overtrade and they overtrade, they keep on losing, they keep on trading, and then there comes a time when the entire capital blows up. The account balance becomes zero. They start facing margin calls, and they have to like cut their position even in losses, and then that's the end of the entire trading career. And this is how most of the traders fail in the market. No trader is like kind of having a complete risk of like just 1%, and they keep on losing for like next 200 days, next 500 days, and then they slowly go out of the market. No, this is not the case. For every trader, every failed trader or hedge fund or family fund or any kind of like money fund actually, they fail the same exact way. Over the period of time, they just like take some kind of like a massive risky trade, and they just fail. And that's where execution application is critical, so that the trades are not dependent on psychology, but dependent on some kind of like mathematical model, some kind of like rules that are set. Okay, so moving forward, like how do we generate a strategy? That is kind of a question for like many people in the industry, that do you have a strategy, do you have a working strategy? And I'm like, what kind of strategy do you want? Do you want it on low time frame? Do you want it on HFT kind of high frequency kind of like trading systems? Do you want it on like higher time frames? What kind of like trading strategy do you want? So the first of all, like the first strategy dependent on what is kind of like capital are we looking at. Okay, so the capital we are looking at is in kind of like some couple of thousands INR I'm talking about. Let's say the capital is under 50,000. You can't have an option selling strategy. The margin required for option selling is kind of more than couple of lakhs, just to have on a safer side with all the adjustments. For futures trading, it's definitely more than 50k. So these two strategies are out of the box, okay, out of the league actually. If the capital is like more than 300 or like let's say like 5,000 crores. You cannot have a strategy that places market orders, right? You cannot deploy like 5,000 or 5 million, some kind of like 5 billion kind of capital on a high frequency trading systems. That is not, that will not be accepted by it, because this kind of like capital will move the entire kind of market. Okay. Warren Buffett will not be having some kind of like intraday strategy with entire of his capital, because that is specifically not sustainable. That means it will start affecting the liquidity of the market itself. Okay, so that is kind of like capital that governs what kind of strategy you can run on the capital. Moving on to the next part, data dependencies. So what kind of data are you looking at? If you are looking at end of day data, suppose like you only have access to the end of day data from NSE or from any kind of like data vendor, then you cannot like make an intraday strategy on the end of day data. Okay, suppose like there's no one going to like sell you short. Okay, your broker is not kind of allowing to short the stocks, okay, which are not in FNO segments, and you want to like short the stocks on cash segments, then you cannot have the strategy. Okay, so the strategy selection, first of all you have to note down the constraints. Actually, what kind of capital am I looking at? So if the capital is in certain range, then you can have certain kind of strategies. If the capital is not in certain range, then you have to discard a certain set of strategies. Okay, coming on to data dependencies, like are you able to collect tick by tick data? Then like you can go for scalping kind of strategy. If you are not able to collect tick by tick data, or if you are I'll talk about infrastructure in later part of this video. But if the data is not compatible to your strategy, then you simply cannot have that strategy. The third and most important, which is often overlooked, is compliances and regulations. So over the period of history, we have seen many kind of like firms, funds and people who are like put behind bars just because they tried to meddle up with the compliances, okay, and regulations. So this is extremely important, that you do not come across some kind of strategy that is promising you a good amount of return, but the thing is that you are at the risk of losing everything. Okay, so there are some kind of like people who are very much into this insider tradings. They also know that it is illegal, but the thing is that everything fits in the front of their greed. So they try to indulge into some kind of system. There are some strategies similar to like spoofing, where it's basically kind of like fooling people that there is some kind of like big orders that are in the pipeline, but the thing is that they are just being cancelled as soon as the price reaches that point. So it's kind of like some fooling kind of strategies that are being banned by the regulators. Okay, so you have to be very cautious that is the strategy that you are following, are they like have a green light from this from the regulatory bodies. So in India we have SEBI, that is kind of like regulating all this kind of compliances. The last part is the infrastructure dependencies. So by now you must be having a good idea that what kind of like infrastructure are we talking about. So if we have kind of a strategy that is very ultra high frequency, so you need to have kind of system that can deal with those kind of strategies. Okay, so for high frequency systems we have co-location facilities provided by NSE itself. Okay, you can have your strategy in the server of NSE, and then your strategy can work on a very low latency system. So let me define what is latency. Okay, so whenever you are placing an order, so let's say like I placed an order for Reliance on 2400, so that's the current price, and by the time I placed the order and by the time the order reached the NSE order exchange, okay, so what is the time gap? So for different systems the time gap may be having some kind of like different domains, so it's generally under 1 second. So for this kind of like latency, we are not for a retail trader is not getting impacted much. But if the strategy is dealing with some kind of like milliseconds, some kind of scalping, then it can make or break a strategy. Okay. So if you have kind of a swing trading strategy where you are comfortably taking 1 or 2 trades once a month, then you can be very much comfortable that you can place a limit order, and the latency won't be hurting you much. Okay. So that is kind of like infrastructure dependence of the strategy. Now once we have finalized the strategy, we will take an example of a simple strategy. So let's say we have a very simple strategy, so that if we have will have a long entry signal when the RSI crosses 70. We will exit that trade when the RSI again drops below 60. We will have a short entry signal when the RSI crosses below 30, and we will have a short exit signal when the RSI rises above 40. Okay. So the thing is that I am having an assumption that you guys know about RSI candlesticks, trend lines, some kind of like price patterns. Even though don't know, RSI is relative strength index. This is a technical indicator that is used to like use in many kind of trading strategies. Is it successful or not successful? I don't know. You can backtest it out. I'll again come to this backtesting part. So let's have this strategy. So when we'll now come to the execution part. So this is the strategy that we tested, and we are going to run it on 15 minutes of time frame. On let's say a example of stock, let's say Reliance. Okay. So historically it has proven that this strategy may work fine. So we can assume that past behavior is going to continue in the future, although this may not be the case. So when the strategy generates a signal, so what do we need in the execution app? So let me draw a black box. So our strategy is sitting here. Okay. So what does the strategy needs to generate the signal? The strategy needs live data of 15 minutes. So in every 15 minutes you have to feed it live data of Reliance. Okay. What will the strategy output? The strategy will output either buy or either sell, buy exit and sell exit. Who will take this entire signals? Okay, so let's put the order condition, like current order condition in this, whether we are currently in what kind of like order are we in. Are we not in any kind of like order? So we'll like put it blank. Are we already having long orders, or are we already having short orders? So if we input this this parameter along with the data, the strategy can give us buy, sell, buy exit or sell exit. Okay, because that's what our strategy is. So the strategy will take in the data, the strategy will calculate the RSI. If our order book is empty, the strategy will generate a buy signal. If the RSI crosses 70, if we are already in position and the RSI drops below 60, the strategy will generate an exit signal, and vice versa for this sell. Okay. Now the part of the execution application. So the execution application will take this kind of like orders generated by the strategy and then place the order, send the order to your broker. So I mentioned it in a very simpler format. it will give the data to the strategy. Okay, so whatever this kind of like live data of reliance on every 15 minutes, it is given to the strategy, and the strategy will give the buy and sell signals to this execution app, and this execution app will again send the orders to the broker. Okay, broker will revert back with success or failure and what price it was triggered, what kind of like order get filled, and all the informations that will be taken by the execution app, again sent to the strategy with this kind of like information, whether we are in long, whether we are blank, or whether we are short. So this is kind of a cyclical system, a closed kind of system. Okay, execution app will have all kind of like risk management system, all kind of like data infrastructure, all kind of storage informations, that orders are stored in the database itself, kind of like analytics if you want to add. So the thing is that execution app can be as large as an entire system, as small as just a buy sell signal. Okay, so coming forward to the execution application. Yeah, so first of all, it is strategy dependent. Okay, so the execution app has to be strategy dependent, because if the strategy is generating like signals frantically, let's say like couple of tens and 20s of signal per second, okay, the execution application has to be capable to handle that amount of orders, to send that amount of orders to the broker, to receive the information from the broker and store it in the database, and again send it to the strategy to create new set of orders. And this has to be like generated in the real-time system. The execution app is responsible for collecting the data from the market itself on the live market data, for the order book itself, what kind of like order book is existing, and place trades, that is normal. So this is the entire overview of the execution system and the strategy, and these two systems make an entire trading applications. Okay, so the execution application, how does it send? So if we go in deep into this execution application, how does it work? Okay, so most of the brokers, like, they have kind of an API interface. Okay, so what does this API do? Okay, so you can collect the data if the broker is giving you the data of the live market. So Zerodha has its API, and you can collect live market data as well as historical data using its API. Okay, it's chargeable, and many brokers have free of cost APIs through which you can send the data and receive the data as well, for the market data itself and for the trading signal, trade generation also. Okay, so we will over the coming webinars, we will be keep on having so many discussions about execution application. We will be generating strategies, we will be showing you various kind of like dashboards, how you can generate trading signals, generate better strategies, fine tune the execution application, how to make it better. So that is what is going to come off in upcoming webinars. Okay, in case you have certain requirements, in case you want to backtest a certain strategies. So yeah, what is backtesting? We'll go on to the next section. So we already have kind of a form in our Telegram group. We have circulated the form, and we have received a couple of questions that you wanted to take me. So I'll go and proceed to the topics that we have to discuss. Okay, so the first question was how to start Quant Journey. Okay, so if you have started thinking about mathematics behind the strategies, mathematical models, okay, that go into various parts of derivatives. So you must have heard about like option Greeks, you must have heard about the decays of the options, you must have heard about strategies, some mathematical models. You have already started it. Okay, so Quant Journey is actually comprised of three major domains actually. The first one is mathematics, of course. You have to be very good at probability and statistics, because using these two skills you are going to like have a better judge on the strategy's performance. You can better like fine tune your strategies only if you have some kind of mathematical knowledge. Okay, you can generate good strategy, you can generate good RM risk management systems if you have mathematical understanding, because generating profits is all about numbers. You have to buy low and sell high, and that is kind of like the basics of everything. And buying low and selling high is kind of like a numbers game. Okay, so you have to buy lower than what you are going to sell, and this you have to do over a consistent period of time so that you can make a living out of your trading success. Okay? The second thing is programming. So why programming is emphasized in Quant Journey? Because suppose you know mathematics, suppose you have a strategy, you have a good financial understanding. How much can you calculate on a piece of paper, or let's say using a calculator? It has to be, some kind of like automation has to be done, because there is so much of data to crunch. Exchanges are generating some petabytes of data, not even terabytes, it's going up to petabytes of data per day. And to crunch and to get some insights from this amount of data is kind of really weird if you do not approach it on a programmatic front. Okay, and the third part is obviously the finance part. You have to be good at the basics finance, starting from what kind of like quantitative journey are you into. If you are on a macro level, if you want to like generate some signals or trade on a macro level, on a global scale, you want to like invest into Japanese markets, or let's say European market, or US markets, or let's say like cross country markets, you have to understand the correlation between the stock prices, some kind of like forex knowledge. This kind of like financial intuition you have to have. Okay? If you want to like generate into a specific market, into a specific derivative or instrument, let's say you want to get into only into crypto trading. Okay? So you have to know how a crypto works, or how the prices of crypto are correlated with other assets. You want to like take into account the gold prices when you are like investing into equities. You have to take into account of forex. You have to take into account of the derivative pricing if you are dealing with derivatives. Okay, so these are the three major domains of a quant journey. The second question I received was the difference between quant developer and a researcher. Okay. On a broader term, actually, you can allocate the execution application to quant developer, and you can allocate the strategy part to researcher. This is on a very, very broad term. Similar to the fact that strategy and execution are interlinked and intertwined, on a similar ground, quant developer and quant researcher are interchangeable, and they have roles and responsibilities that are interexchangeable. Okay. So yes, going further, what are the challenges with automation? Okay, so what kind of automation are we looking at here? Okay. If you just want to like send the signals, send the like orders through API, so what is the robustness that the API provider provides with his or her API? Okay, what kind of like order signals, what kind of like trace back is generated, what kind of like data is being given out, in which format it is given out, what language is it supporting, what caveats it doesn't support. So all these are the challenges with automation, and different kind of automation projects has a separate different kind of like problems. Okay, so some may support some kind of programming language and some may not have, so you have to translate it out with the APIs itself. You have to like have a unified, if they work with JSON data, you have to have output that concedes to that requirements. Okay, challenges with data, so that is a big topic actually. So the thing is that we have a very famous term of garbage in, garbage out. Okay, so if your data is garbage, if your data is not proper, then your signals that you will be generating on those data will also be garbage. They may or may not work on in the real live market. Okay, so this is what is the problem with the free data sources that are available in the market. Okay, so let's say an example of Yahoo Finance. So that is kind of like a free data repository of Yahoo, and that So if you have a chance, you can go up to that site and you can start look back over a period of like before 2000s and start getting the data. So you can see some missing values there. Okay? So that is the data quality issues. So you cannot generate, you cannot have some signal that go as back or as long as 1990s. Okay? I'm just specifically talking about Indian markets. That's what I have faced. If you are going for paid data sources, so they may have some pretty good reliability, but again you have to like verify from couple of sources. You have to match it going forward into the live market, that data is consistent, data is like clear, and it is in usable format. Many of the strategies, they follow some sentiment analysis. Okay, so for them actually the data has to be pretty much in curated form. Okay, some kind of like natural language processing is on the data itself, so the data has to be on top notch quality. If the data is not of top notch quality, and then you have to spend a good amount of like engineering hours on cleaning the data, sorting the data, and like making it in a usable format. Okay. Moving forward, consistent edge of the strategy. Okay, so any kind of like strategy that you are using or like someone is using in the market, they are actually short lived. Okay. So the thing is that the strategy will start underperforming, the strategy will start degrading, and it will start giving you losses. So how do you ensure that this kind of like problem doesn't occur with your system? So you have, whenever the strategy is performing good, at the same time you have to start developing new strategies, you have to start developing new caveats, you have to start having new insights from the market. How can I improve this strategy? Okay, how can the strategy be future proofed? So there is very little scope of future proofing, but how do you tweak the strategy, or where are we losing money on this strategy, and how can we optimize it? Whether we can optimize it on infrastructural front, we can optimize it on kind of like some parameters of the strategy itself. So that is kind of like challenge of consistent edge of the strategy, and this is kind of a lifelong venture actually. There is no strategy that exists in this world that you can automate it and then like you are done for the life. So if that was the case, we would have many traders who would be like just doing nothing because they might have automated it. But the thing is that we are still seeing so many traders that are like putting in and day out, so many like hedge funds, so many money making firms that are still putting in so many engineering hours, so many like strategy hours, just to maintain the edge of the strategy. The issue of latency we have already discussed, depends on the strategy itself. If the strategy deals in like low latency, you cannot afford to have latency greater than the strategy's threshold. Okay. The seventh question is a very interesting one: machine learning in finance. So a good amount of research has been going on since last decade on machine learning in finance. So the problem is with that, in finance the data is not static. Okay, so a very classic example of deep learning I can say is recognition of handwritten digits, or recognition of like some faces and facial features. So this kind of like problems we deal in machine learning. But when it comes to finance, okay, so let's take an analogy. Let's say model is kind of like separating out between a cat and a dog. So the model is pre-trained on hundreds and thousands of images of cats and dogs, and the model now knows, ML model now knows that what kind of like features do we need to extract it to identify that this is an image of a cat, and what kind of like features do we need to extract from an image so that it can identify that this is the image of a dog. Okay, but when it comes to finance, okay, let's see, like we need to separate out whether the model has to like, we need to separate out the companies that are going to perform poorly and the companies that are going to perform good actually. Now the thing is that there's so much of features, and those features are kind of like interlinked, and then again the profit making companies may turn out to and they may perform poorly in the future segment, and the loss making companies may turn around and have kind of like a good result that it can destroy the model itself. Okay, so the model that has been trained on previous data, that data heuristics, that previous data is not going to be exactly equal to the future data, and that is the biggest problem for application of machine learning in finance. But again, researchers are putting in and day out for their applications of models in finance, and they have been successful for a good amount of time, and the research is kind of like never ending process. So it has some limitation, but people are pushing it, and many are successful, many are still in the process. So that is the thing. So where is backtesting? So backtesting goes into strategy generation. Okay, so whenever you have some kind of a hypothesis, you have to validate the hypothesis. Whether the hypothesis is being proven correct or wrong, you have to validate into the live market itself using the historical data. So there is the backtesting that goes into. Okay, so there is also a term of forward testing. So you deploy the strategy in the live market with a very small amount of capital, or even dummy capital, that it will just do the replication of the strategy on a dummy kind of trading account, and then you can validate your strategy. So this is the backtesting part. So by this question I'm ending this discussion. See you in the next webinar, that will be hosted probably next Sunday. So yeah, if you have any questions, if you have any queries, you can comment it down. You can join our Telegram channel, you can join Discord, or connect with us on LinkedIn, and you can directly ask your questions. You can have a suggestion and we'll try to incorporate it. So thank you from the Beta Quants team. See you soon.